So what determines your FICO score? Well, there are five there are five things that actually determine your FICO score. There is payment history, about amounts owed, and then you have types of credit, your length of credit, and new credit. Now, these are all not evenly distributed as far as what impacts your credit score. Payment history actually impacts your score about 35%. So what's the key to that? The key is make sure that you're paying your bills on time. Negative payments stay on your record for about 7 years. And so the more delinquent payments, then the more negative impact to your credit score. Same thing with amounts owed. It impacts about 30% of your overall credit. So in this case, it's huge in credit cards. So you don't want to use no more than 20% of your overall limit. So if you have $10,000 of credit line, you don't want to use no more than $2,000 of that in order to keep a good credit score. If you go over that, then it starts negatively impacting your credit score. Great example is when I was basically living off of credit cards back in my early days, which was, really tough days. I had over $35,000 of credit card debt. My limit, $35,000. But when I was able to pay all that off, my credit score went from a 665 to 801, right? So there's a huge impact to my credit score simply because I kept my balance at a minimal levels. Types of credit. So types of credit can be open credit or closed credit. Open or closed. And it's about 10% of your credit that it impacts. So, open lines of credit, you'd be your credit cards, lines of credit, home equity lines of credit. Closed credit would mean like a car loan or a mortgage loan. So when you can, something you can actually pay off and it's gone. Something that has a term loan, any type of term loan. All right. And then length of credit, which is just basically your history. So that impacts about 15% of your overall credit score. So the longer that you have credit, then the better your credit would be. So if you're 18, 19, 20 years old, then you're probably not going to have much here. So it's not going to impact your credit as much. But as you get older, then it starts weighing a little bit more heavily because now you're older, you've had credit a long time, you have a credit card a long time, and maybe you've bought a couple of cars by then. So now length of credit now starts impacting your credit score in a positive way. And then lastly, new credit, which is about 10% of your credit score. Now, what I mean by new credit, that means that's like inquiries, right? So we have what's called a soft pull, and what's called a hard pull. Now, a soft pull on your overall credit, this means that's credit that you're checking, right? So if you want to see what your credit score looks like, if you want to pull your credit report, because you have access to pull your credit report at least once a year at no cost and no impact to your credit score. And so you can go to Experian, TransUnion, Equifax, and pull from all those credit bureaus to see what your credit looks like. Also, any type of pre-qualification is a soft pull. So soft pulls don't impact your credit score. A hard pull is actually when you're actually applying for credit. So this implies that you're applying for some type of credit, right? So when you're applying for credit, then that starts impacting your credit score. Some key things here to note is that one or two inquiries is not going to impact you too much. If you're shopping for a car or a home to where you're shopping around multiple banks or financial institutions to identify which gives you the best rate, if you do that within a short amount of time, whether 5, 6, 7, 8, 9 institutions, then it indicates that you're shopping for credit, then that's all going to calculate as one pool because you're actually looking for the best interest rate. But if you're applying for a credit card here and there, not necessarily shopping for the best rate, then it's incorrect every time. But if you're actually shopping for the best rate for a particular product or service, such as a car loan or a mortgage loan, it's only going to count as one inquiry. So that's all that goes into factoring in how your credit score is determined. I hope that helps you in understanding how your credit score is impacted. And then the next couple other videos, I'll show you how you can build your credit and what other factors are inside your credit report.